Lucid Motors, it's one of the most active and trending stocks out there, being loved and promoted by so many people. But there's a big problem that's
This is not okay. This needs to stop now.
surrounding Lucid, and we're going to talk about this. Now, this is an article from Peter Lynch, One Up on Wall Street, and he's talking about the stage 4. And basically, people used to ask Peter Lynch whenever he went to these conferences about what do you think the market is doing? When is it going to crash? And Peter never had a good answer. So he gave this example. He would go to this party. So imagine there was a party, and this party consisted of a variety of different people, maybe doctors, engineers, and whatnot, other people from the other trades. And he was there at that party. Stage 1 would be that stage where everyone would be talking to the doctor. Everyone was interested in the doctor, and no one was interested in Peter Lynch. Peter Lynch as an investor, no one was interested in him. Then came stage 2, then came stage 3, and then lastly, he's talking about stage 4, which is the most interesting. In stage 4, once again, they're crowded around me. But this time, it's to tell me what stocks I should buy. So people in the party, they are talking to Peter Lynch and they are giving him stock tips. So think about it. Peter Lynch, well, one of the most renowned investor out there, and people would give him stock tips. Even the dentist has 3 or 4 tips. And in the next few days, I look up his recommendations in the newspaper and they have all gone up. Something similar to what's happening nowadays. When the neighbors tell me what to buy and then I wish I had taken their advice, it's a sure sign that the market has reached a top and is due for a tumble. Now, this is something which you can test yourself. Go and walk into any restaurant or bar or any, and you will see people would be talking to you and they would give you their own stock tips. Now, let's look at what's happening with Lucid. This is the biggest problem. The valuation, it's sitting at about $60 billion right now with no revenue. They just started delivering their cars. I think it was 30th of October. They had 20 cars that went out, and that's about it. There's no revenue going on. And this company forget about profits. There's now no money coming in fact. And this company is being given a valuation of $60 billion. Now, I don't say Lucid is a bad company, is it a bad car? No, it looks like a good car and it looks like it might have some traction out there in the automotive community. But from the financial perspective, I mean, if you imagine if you had $100 billion in your bank account, and if you wanted to buy a company worth $60 billion, would you go and buy it? And only to find out that you're not getting any money out of it, you're not getting any revenue out of it, and there's a long runway ahead before it becomes profitable for you, before you can start getting your money back. It might take about 20-30 years before this company can become profitable. I mean, God knows, but if you think about it, 30-40 years before it becomes profitable, another 50 years for it to get your money, $60 billion back. So about 100 years, and you're giving them $60 billion right now to get $60 billion after 100 years. What's the logic in that? Now, this is probably most, you can look at the dislikes down there. The dislikes are probably more than the dislikes. That's something which I feel might happen with this video. But this is something just to let you know what's going on out there from the financial perspective. When something rises up, especially, you see Tesla going up, you see NIO going up, and you think, oh, Lucid is going to go up as well. And that's the herd mentality that goes on in the financial sector very much predominantly. I'll leave you last with this quote from the same book, and he spoke about where avoid hot stocks in hot industries. Basically, you want to find stocks that are sitting on the ground floor, not on the top floor. So with that, take care, stay safe. Don't take my word as a financial advice. Don't go and do your thing with this. Do your own research, understand yourself before you do anything with this or any other company. Don't listen to anyone out there. Do your own thing. With that, take care. Bye-bye.